Just a reminder, this is not financial advice. This is not legal advice. Do your own research. I'm never going to reach out to you either in the comment section or through any other means to try to get you to invest in something that I'm investing in or to send me crypto. Some links underneath the video are affiliate links. I may earn a commission, but this is at no extra cost to you. Of course, do your own due diligence. Alex Hormozi just had a hot take. He even debated posting about it, and it has to do exactly with what we talk about every day, which is investments and making sure that you have invested enough money so that way you can retire one day. We talk about Bitcoin a lot on this channel because I think Bitcoin can be a way that you can accelerate your retirement, that you can actually outpace the market. But I want to go through this, kind of a hot take, like I said. We also have Bitcoin, which if you just looked at this chart, right, if you just saw the price right now, you'd think, oh, it hasn't done anything all weekend. But we actually had a pretty quick dump and pump this morning. So I'll talk about why that is as well. If you don't mind though, hit subscribe so you can see future videos just like this. If you want to trade crypto, you can check out BYDeFi. There's a link to it in the link tree. We have about 1 week left where you can get up to $10,000 worth of Bitcoin just for trading on the platform. And if you've signed up under my link, you're automatically going to be entered in for this. And if you're not signed up under my link, but you already have a BYDeFi account, you can actually join our Telegram. I have someone in there, there's a pinned message about it, that can get you signed up under me, so that way you can get some of these rewards. So check that out. Also, there's a link to BTCC. There's a 1,500 USDT giveaway over there. So markets, are going to open tomorrow. Of course, Bitcoin has been like a decent bellwether for whether the markets are risk on or not. And while it dropped on the 5th, on Friday, it just kind of stayed steady over the weekend. We had a really good week last week with the NASDAQ and the S&P 500 up 4 days in a row, I want to say, and approaching all-time highs. We did have a bit of a dump this morning. It was a coordinated attack, just like we've seen in the past. Wintermute dumped almost 10,000 Bitcoin. Binance dumped a lot. Coinbase dumped some. Bitfinex, BlackRock, Bitwise. So really, we can see these kinds of liquidation events happen, especially over the weekend when there's not a lot of volume. We had $227 million worth of longs liquidated in the last 24 hours, and that caused us to fall down all the way down to under 88,000, then pump right back up. So a $1,500 move up or down and back real fast. Of course, all eyes will be on the Fed interest rate decision in 3 days. So, any kind of data coming out between now and then, I don't think it will really affect this very much because there's not anything big happening over the next 2 days. But we're going to watch to see how Jerome Powell talks about the market, how he approaches inflation and all that stuff. There is some other economic data later in the week to pay attention to as well, which we covered yesterday. All right. Alex Hormozi said he debated even posting this because it can make you feel hopeless, but I think the truth is always best found out early. Many financial gurus talk about investing $100 a month to get to a point where $1 million can help you retire. The reality of the math is if inflation is 3% per year, that $1 million isn't worth $1 million today because compounding inflation is just as powerful as compounding returns. Said differently, $1 million in 60 years is only worth about $167,000 of today's buying power with 3% inflation. And typically, with late-stage capitalism, rate of inflation increases, not decreases. So what does this mean in reality? You have to 6x your goal. If you want to retire with $1 million and $40,000 per year passive, you actually want $6,000 and $240,000 per year passive. If you wanted $4 million and $200K passive, you really need $24 million and $1.2 million in passive income. Now let's say inflation is 2.3% rather than 3%, the historical average. Okay, you have overshot your goal by 50%. Money will be 1/4 as valuable rather than 1/6. Great, retire early. But the alternative is certainly worse, undershoot and be a burden to the people you care about, hoping that social nets may or may not exist then, who knows. Regardless, I've never seen anyone talk about this, and maybe it's because it makes people feel hopeless, but I figured math is math, and you shouldn't be afraid to do it yourself. Always better to overshoot. All right. Kind of, a hot take. He's saying it's a hot take. Honestly, retiring is going to be much harder than most people think, but a lot of people take into account this 3% inflation. At least, if you've talked to financial advisors or really dug into this, a lot of people don't use 10% a year investment returns to calculate like how fast they'll be able to retire. They might do 7 or 6%, right? Some of the articles I've talked about on this channel before, like the shockingly simple math of early retirement, we went through like how quickly you could retire, and that's based on a 5% average investment return. So that takes into account 2 or 3% inflation, and then that's still only saying you're going to get 8 or so percent in returns. We have outpaced that over the last 5 years. We've had really good returns in the stock market, but yeah, I think a lot of people just assume that like at $1 million you'll be able to retire, and while that will definitely give you some breathing room, if you're looking at the 4% rule, yeah, it might take more than $1 million for sure. One thing that I want to point out that I think is a little bit misleading or just not well thought out. Alex said differently, $1 million in 60 years is only worth $167,000 of today's buying power with 3% inflation. A lot of people, like younger people, 20, 30, 40, that want to retire early, they think about the 4% rule. But again, if you talk to enough financial advisors, you realize that people later in life don't need the 4% rule. And it just is simple math. Let's say you think you're going to live to 100 years old, right? And you're 25 right now. Well, retiring in 60 years means that you're going to retire at 85. And then like if you're only spending 4% of this $1 million, well, I mean, just 4% takes 25 years to go through if it's just sitting in cash. Take out inflation for a second, but you're only going to live 15 years, and that's assuming no investment return. You're going to have money left over. So what I'm trying to say is like later in life, if you're retiring and you're not retiring early, or you don't expect to live to like 90 or 100, let's say you retire at 65 and you're planning to just die like the normal age at 82 or something, you don't need the 4% rule. You need less than that. So there's like a little bit of a silver lining, I guess, if you want to call it that if you don't retire early, you don't need the 4% rule typically. And there are some social nets, but I would say in general, yeah, you should account for inflation. This is one of the great things about Bitcoin. Like if you can buy something that appreciates faster, and Bitcoin's done that over time. I mean, even if you just look at the last like 3 years, right? If you bought, not even perfectly in the bear market, but you bought 25,000, now it's 90,000, right? It's a 3x. Typically that would take you 13 or 14 years in the stock market. If that happened, right? If you bought that, inflation doesn't affect you quite as much because you got where you want to go in maybe half the time or a third the time. So inflation hasn't compounded as quickly. So there is something to be said for that. Now, in reality, I think most people that watch this channel will probably do really well over time. You're probably going to retire young. As long as you're not just YOLOing all the time, you're probably going to be able to retire young. And the fact is, a lot of people that do retire young, like let's say right now, you got up to $4 million and, based on the 4% rule, you have $160,000 in passive income. Let's say you're 35. You might retire from your normal job, but you probably would find something to do that made you money that you'd like, right? I mean, even if you're just like, I don't know, helping a buddy with a brewery or something, you could probably work there. Or, you start woodworking or whatever it is, right? You start a little side business. You're probably going to make something, right? And even if you don't, just over time, right, the 4% rule is really conservative, right? It's based on like a 96, 97% successful rate. So chances are you're going to have more than enough money. But yeah, I would definitely try to overshoot retirement instead of undershoot. I would try to, cut back if you're in a position where you're just like, you're basically at break even. Yeah, try to pull back a little bit on spending so that you have more money to invest in. Make sure you're not just YOLOing it, right? Like I talk about BYDFi, I talk about leverage, but I think this is safer actually than investing in small altcoins. I think it takes less time as well, so you can spend more time actually working. And this is what I'm doing with a small portion of my portfolio. I don't think it really makes sense to do with 100% of your portfolio because mentally it's too hard to withstand that kind of volatility. Let me know your thoughts on all this underneath the video. Again, if you do want to trade, you can check out BYDFi. Let me know what do you think about Alex Hormozi's take. Let me know if you actually think it's a hot take. I don't really think it is, honestly. But let me know your thoughts. I appreciate it. Thank you so much. See you soon. Bye.